What's up, YouTube? Welcome back to my channel, Physician, Finances, and Investing. I'm Joe, a resident physician. In today's video, I want to talk about one of my favorite companies and the amazing numbers that they just reported, my reaction to those numbers, and what I recommend doing at this point in time. So with all of that being said, you know what time it is. Let's talk about how to get that bread. Hey everyone, welcome back to my channel. As you may be aware, Apple just reported its Q2 earnings this past Thursday after the market closed. And boy oh boy, were those amazing numbers. With everything going on right now globally because of the pandemic, we have seen a ton of money funnel out of different sectors and go into technology. And let me tell you, Apple did not disappoint. Not only did Apple perform well this past quarter, but they completely annihilated analyst expectations. Apple beat on all major metrics, including their earnings per share, net income, and their total revenue. But in addition to that, we also continue to see huge growth in their services business, which has become a major part of their business model over the past few years. Even more exciting and talked about by analysts and investors is the news that Apple CEO Tim Cook announced regarding the 4-to-1 stock split that is planned at the end of August. This means that if you own one share of Apple stock, then at the end of August, that one share will convert to 4 shares. This news has become the talk of the town with so many people, myself included, excited about the stock split. Historically, this is not the first time that Apple has announced a stock split, with their most recent stock split coming a few years back in 2014. Apple tends to do this periodically whenever their stock price becomes elevated, like it recently has, in order to keep the share price at around $100 per share. Not only does this stock split give commercial investors the opportunity to buy into an amazing company like Apple at a lower stock price, but it also gives dividend investors like myself an opportunity to continue to grow their dividend income. As a growth company, Apple already is paying a pretty nice dividend, which they have been able to grow consecutively over the past few years. With the stock split, Apple will continue to pay the same dividend yield which it already is, but this is an exciting opportunity for investors, especially people who may already be Apple shareholders. With the stock split, this means that you will now have 4 times as many shares as you currently do. So in the future, as Apple continues to grow its dividend year over year, you'll be entitled to even more dividend income. So with that in mind, I have seen so many people asking the question, what does that mean for me right now? Should I buy more shares of Apple before the stock split, or should I wait until after the stock split? In order to answer that question, I think we need to take a step back and think about the bigger picture. Yes, Apple did report amazing numbers this past quarter, and they knocked analyst expectations out of the park. But just take a look at its stock price. It's currently trading at all-time highs. And while we have seen a substantial recovery in the economy since the March lows, certain sectors such as consumer discretionaries and financials continue to lag behind because of the ongoing uncertainty that the pandemic is bringing. Personally, I believe that as we continue to see the pandemic situation evolve over the coming months and ultimately start to see it resolve once a vaccine becomes available, that we will see some of that money start funneling out of the tech sector back into these more heavily hit industries. So does that mean that I'm saying you shouldn't buy any shares of Apple? No, not necessarily. I think it's okay to pick up some shares of Apple at the current market cap, but with that being said, I wouldn't get the fear of missing out and start flooding all of my money into tech companies like Apple. I do believe that with the current market cap, it is quite overpriced, and with all the uncertainty that continues in our economy right now, I do believe that, like I mentioned, over time we will see some of that money start to pull out of tech companies into some of these other sectors. Now, at the end of the day, this is just my personal opinion. This is not financial advice. Please comment below and let me know what your thoughts are and what you're planning to do whenever it comes to Apple. As a reminder, I'm not a certified financial planner. I'm a resident physician who recognizes the importance of taking an active role whenever it comes to managing your finances and wanted to encourage others to do the same. So with that being said, I highly encourage everyone to do their own research before making any financial decisions. That concludes another episode of Physician, Finances, and Investing. I hope that you found this video both fun and informative. If you have any questions or would like me to talk about a particular topic in a future video, please comment below and I'll be sure to get that information to you. And if you haven't already, please smash that like button and click on the subscribe button to let me know that you like what we're doing here at Physician Finances and Investing and to help support my channel. Thanks everyone, and have a great day.